So an EIN, like we said earlier, is like a social security number for your business. So whether you have an LLC, a partnership, or a corporation, you need to file a EIN number. Whenever you change the name, if you change the name of your business, in some cases within the LLC, you don't need a new EIN number, but there can be other situations where you do have to get another one. That's something that you would speak to your tax preparer with. An EIN number is required in cases like when you need to get a business bank account, or if you're applying for a loan, or if you're applying for a grant. Some organizations may ask you for your EIN number. They're not going to accept a social security number. Even if you have a sole proprietorship, I recommend that you still get an EIN number because it's essential. It's something, and also when you're applying for certain things with your business, it distinguishes you and it shows that, you're more intentional and it's just more professional, I guess I can say.
Welcome, Melanated Married Millionaires in the making and friends, to another impactful episode. We're about to go through and highlight a melanated married couple, or just go through some lessons that we got. Make sure y'all tap in with the conversation. Queen, where can they go to tap in?
TheeM4Show.com.
Yes, ma'am. And make sure y'all follow us on Instagram. Queen, where can they follow us on Instagram?
TheeM4Show.
Now, if y'all haven't liked and subscribed, it would make the Queen very, very happy. If you can go ahead. Very? What should they do?
You should go ahead and subscribe on Apple Podcasts, Spotify, YouTube, wherever you're watching or listening. Go ahead and hit that subscribe button.
It's free, and your first step to becoming a millionaire. Go ahead and click that button. And let's get into the show.
Let's do it.
Look. Y'all better find somebody you can be corny with. But welcome back to the Melanated Married Millionaires in the Making show. I'm your host, Truvel, creator of Black Wall Street, the board game. And as usual, I have my powerful, my dancing, my corny, my cheferific queen. Please introduce yourself.
What is up, everybody? My name is Sinclair, aka the Health Nerd. And yes, it's been a chill day.
It has.
I've been vibing with it. I'm not gonna lie to you, but we still gonna bring the energy to the podcast. Let's go.
So we met this person who we're about to introduce y'all to when we were in Atlanta for the Bank on It series. Shout out to Ben and the whole Our Palette squad. And it was just like a whole podcast series. I don't know if it was a podcast series, like a TV type series, but it was a series nonetheless, talking about financial literacy within the Black community, talking about how we can build wealth within the Black community, talking about, are we in a identity crisis or a financial literacy crisis? Just a lot of really good talking points when it comes to around culture and Black wealth.
Yeah.
And this is one of the amazing people that we got to meet while we were in Atlanta. And we were just like, do you want to come on the podcast? She was like, sure. So we circled back and we finally made it happen. So this is going to be a really good episode on business structure, the different tax implications and benefits of the different business structures. So if you're thinking about starting a business, if you already have a business, but you're not too sure if you made the right choice yet, this is the right episode you want to listen to. I have my notepad. I encourage you to take your mental notes, real notes, text notes, whatever you got to do to actually remember, because I know this person could have dropped some gems. But before we get into it, Queen, we have to hit the people with the did you know.
You said hit the people, so I was like, oh, you're gonna hit
real quick. Creed 3, I'm very excited about.
Oh yeah, when does that come out?
God, I don't know.
It's
I need to
like
look
May
back.
of next year.
Creed,
Don't even
Creed
get too
3,
excited.
I'm excited.
I
I can't wait. But Queen, hit the people with the did you know.
Yes. So for the real ones that have been listening since True Health Forever, you may have heard this one, but I'm gonna bring it back because it was very applicable. The king, he left me again, y'all. He left me again for like 4 days. You didn't?
Why it's on our business? Tell him why I left you this time.
For a work conference? The same as last time? Like, what was that for?
Oh,
anyways, he left me and he came back and we did our very usual, like, stop what you're doing. He had to remind me because I was in the middle of cooking, but stop what you're doing and give me a hug. And that is because hugs are known to not only reduce stress, right? They actually can reduce your cortisol levels if you're hugging somebody that you actually want to be hugged by. They can reduce your cortisol levels, and they can raise your serotonin levels. It's one of the happy hormones. So it actually has a physical chemical response in your body when you get that physical interaction from a loved one. So one of the ways that we create our space as a safe space for us is whenever we walk through the door, it doesn't matter if we've gone out to the gas station real quick for a little walk, or if we've been gone for 2 weeks. Every time we walk through the door, we stop, we give each other a nice hug, and we just set the intention and set the space for it being our home and a place of love. And so I definitely want to not only pose that as a did you know, but also challenge you to do the same thing with your friends and with your family members, specifically the folks you live with. Whenever you walk into your space, set that intention, give a nice group hug your loved ones, kiss your loved ones, tell them you love them. That's a perfect place and a perfect time to really set that intention.
Well done. Yes, that's part of our culture, our principles. It's fun. Sometimes she tries to walk out the door. I'm like, hey, Sinclair.
I know. I
come,
do forget.
Come here. No. Come here.
Here. There is there.
Hug
Here
me.
is here.
Oh man, that's a good one. But speaking about like things that can be, you said something in there on like if you're hugging somebody who you have that connection with, it can be very, very good, right? Very healing. But if you're hugging somebody who you don't want to hug now, your cortisol levels can rise. I think taxes can have the same impact, right? If you're prepared for tax season, when April comes, you're like, ooh, it's tax season. Come on, right? Because you know you've been preparing all year and you're going to get that check back. But if you haven't been preparing all year, you dread taxes because you may have to pay a little bit extra. So again, today we got Tanika Mann on. So who's going to talk to us about how you can get the most out of your business structures and make sure you're making the right decisions. Real quick, before we get into Tanika, we do have to shout out our small business sponsor of the week. We got Summer Custom Creations. The holiday season is right around the corner and you want to get something special, something custom, something that really says I love you with some personality and swag to it. So you might want to check out Custom Summer Creations. Let's go ahead and put their mission on so that Sinclair's eagle eyes can read those.
Summer's Custom Creations is your one-stop shop for creative, made-to-order custom tees, tumblers, party favors, and more. I mean, let's be real. You can get just about anything on Amazon these days. So really that custom gift, I feel like, is the way to go above and beyond to really say that, like, I thought about this gift for you.
Right. I know you. This gift could only be for Sinclair.
Yep.
Yeah, I love it. So make sure y'all go to summercustomcreation.com. That's summercustomcreations.com to get you a good holiday gift, birthday gift. That's my beard, Sinclair.
I always try to.
Golly. Is there some custom beard stuff on there? Hey, we're going to find out because we're going to go to customcreations.com. All right. So I'm excited to get into it. As I said before, we're talking about business structure and taxes. Get you something to take notes with, or at least if you're driving, do not take notes. Pay very close attention, but make sure when you get to your final destination, you take notes. Queen.
Shout out to Gabriel Martinez. It says that's a hidden gem. I'm assuming maybe talking about the hug. Yeah, or maybe the custom gift. I don't know, but whichever. Thank you, Gabriel, for listening and commenting.
Gabe, we appreciate you. Go mob. All right. So, Queen, are you ready?
Yes.
All right. Well, without further ado, let's get into the episode. Over 50% of Black Americans are unmarried, and only 2% of Black families in America have a net worth over $1 million.
We are on our journey to not only join that 2%, but grow that 2%.
Facts. I'm Devon Truvel, creator of Black Wall Street, the board game, with my beautiful co-host.
I'm Sinclair, aka the Health Nerd. You can go to our website at them4show.com, our Instagram at the M4 Show, and our YouTube channel at Melanated Married Millionaires in the Making.
And welcome to the M4 Show. All right, let's bring her in. There she goes. Long time no see, Miss Tanika. How we feeling?
Feeling great. Thank you both for having me. It's nice to see you guys again.
Of course, not to see you again as well. Heard that you have a little bit of some gloomy weather out there. We apologize, but you are always welcome to come visit sunny California.
I feel like Californians, we're always apologizing for our good weather.
Hold on, what'd you say, Miss Tanika?
I'm definitely going to take you up on that offer. I'll be there.
Let's
And
go.
you too, because this weather, I don't like
It's like, it ain't it.
She
it
said,
ain't it.
I have another random question for you. The brick behind you, is that real brick?
Yes.
Shout out to real brick. We used to have some wallpaper brick, and everybody used to be really surprised when they came in. We can't have brick in California, so I appreciate the fact that you can have a nice, solid, real brick wall behind you. That's nice.
Thank you.
Yeah.
Creates a nice backdrop.
It does. So again, just refreshing the folks, we did meet in Atlanta. Oh gosh, a month ago, 2 months ago. Time is a black hole.
2 years ago, who knows? It's a time warp.
But we met for the Bank on It series, and there was so much like just good conversations and gems from people. Just wondering from your recollection of the event, what's like one of the main things that you kind of took away from that Bank on It conversation?
It was the whole experience altogether. It was very empowering, being in a room full of like-minded people who all want, Black people to excel, who all want to excel in business and just like come together, share knowledge. I feel like everybody has something to bring. So just all together, it was a great experience, learning experience, and just something that you didn't even have to say anything. You could have just sat back and still take away a lot and leave feeling like, okay, I'm ready to get to work and, just be great and better for, not just myself, but my people overall. So, yeah.
Oh, yes. Yeah. And like there was a bunch of different entrepreneurs, business owners, creatives, one of which, of course, being you, the founder of Tahj Tax Services. Before we get into obviously like the real big minute details of business structures and taxes, do you mind giving folks an introduction to your company and how you even just got started in tax services?
Sure. So I officially started Tahj Tax Services back in 2019. Prior to that, I had been doing taxes just for like friends and family here and there. I decided to take it seriously when I realized that I didn't want to work for somebody for the rest of my life.
Say it again for the people in the front.
Yeah, it's just, it's just not for me. I need to have my own business. I feel like I do better in that arena. So I decided to do everything that I needed to do with that and start marketing, advertising, just being more serious, learning more about the industry itself, like different softwares, how to handle the business side of it. And then also I like to help people too. So when you're dealing with taxes, there are people who will scam you. And I don't want to, I really have a genuine joy for helping people with entrepreneurship in their business. So this is, my way that I can connect with small business owners and, help. So it's very fulfilling for me. Mm-hmm.
You had a couple of gems in there. One, we already highlighted there, the not wanting to work for somebody else. I feel like that is, that's when we even talked about when we were, sitting next to each other at the Bank on It, like that mindset and how it can really start to weigh heavy on you if you have to stay in a job that you don't necessarily vibe with or are not feeling that connection with. But I have a question for you. As a tax professional, you have your business as an LLC, is that correct?
Yes.
Okay. So what made you decide to make your business an LLC?
Yeah.
Well, since I do taxes, it's less expensive for me. And because I understand how to form a business and things like that, I don't have to worry about some of the additional costs that come with it. And the biggest thing is the liability protection. So as a sole proprietor, you don't get liability protection. With me, I'm dealing with businesses and taxes, and it can get, there's a lot of risk in that. So I need that extra protection. And so it was just, a no-brainer for me to just go ahead and start an LLC as a starting point for where I am right now.
Can you clarify a little bit more on what you mean that LLC provides you with that liability protection while the sole proprietor does not? What does that mean? Like, what's the risk there?
So as a sole proprietor, you have no protection from the state whatsoever. So if you were to be a part of any litigation and you were to lose your lawsuit, whoever is suing you can come for your personal assets. With an LLC, the state gives you protection where if you were to be sued, a person can only get from you what the business owns, not what you personally have. So not your car, not your house, just whatever is sitting under the business is what a person will be able to take if you were to lose any litigation. So that's really what we're focusing on when we say liability protection.
That's good.
Yep.
So actually, 2 weeks ago, so we teach entrepreneurship in schools, and 2 weeks ago we were going over business structures and the different types of business structures and the benefits of each. And it came up on how sole proprietor, you have very little or no protection at all from litigation. So, and then at the end of the class, I asked all the students, okay, which business structure would you start? Right, a sole proprietor, an LLC, or a corporation? Raise your hand for each. And nobody chose sole proprietor. And I was like, why aren't y'all choosing sole proprietor? They're like, I'm not trying to lose everything. There's too much at risk. And these are like 14-year-olds, 15-year-olds that are like, you're not going to get my $20 that I got in my account.
I can get my Teen Wolf wallet.
My Teen Wolf wallet.
Right, that's a great way to think at such an early age. You definitely want some type of protection against your personal assets, because we work hard for our stuff, and with business, there's so much risk. That's something that you really have to think about when you're starting a business. What are my risks with this? What type of insurance do I need? Is liability protection, just simply enough? What else do I need to do to cover myself and protect myself? And that conversation could go, way deeper. But at a high level, liability protection is something that needs to be considered.
All right, we're gonna get back to the episode in a second, but breathe. If you've ever had a brilliant idea, I'm pretty sure everybody just took a breath right there, right? Because we all have amazing ideas. But I got a question for you. What's stopping you from taking that idea and actually making it into a business, actually executing on your brilliance? My name is Devon Truvel, and in 2018, I was able to create, market, and sell my own product while still working a 9 to 5. And through the years, I've taken the lessons we've learned, the expensive webinars that I've gone to, and the dozens of business books that I've read, and I've discovered 7 simple steps to launch your business. If you're ready to take your business idea to the next level and make it real and start making profit from your passion, head to www.launchitcommunity.com and grab yourself the book. We've been able to make it very simple, affordable, and easier than ever to start that business while still working your 9 to 5. And we take entrepreneurs every single Friday and we talk to them. We teach them about how to use social media. We teach them about how to set up their Instagram account, how to use Shopify, how to use Printful, and other tools that can help you take your business to the next level, but not take tons of time away from your 9 to 5 and your busy life that you already have. So if you're ready to take that idea to the next level, make sure you head to www.launchitcommunity.com, get yourself a book, and join our free accountability calls. Now, let's get back to the episode. So if we can, I want to kind of break these down, right? Because we kind of dove into sole proprietor versus LLC. But I want to, if we can, break each one down, because I feel like there's probably some benefit to a sole proprietor because it does exist. It is a business structure. So I'm sure there's something that's good, or is sole proprietor maybe a good business to start off with for some families, some people. So can we, and you can say no, I guess, but can we go like sole proprietor, LLC, corporation, and really break down what each are, who would be good for a sole proprietor, who would be good for a LLC, and then like tax stuff. I don't you know the words. I don't know the words. Tax stuff within each. Can we break those down?
Of course.
Cool. Look, hey y'all, get to know I got my notebook.
You want to start with sole proprietor?
Let's start off with sole proprietor, because from what I know, that's like the easiest way to get started as an entrepreneur. But I may be wrong. Hit us, Queen Tanika, Professor Tanika.
Thank you. Okay, so a sole proprietor is when a business has one single owner, and like we stated before, there's no liability protection when you're a sole proprietor. So if you decide to be a sole proprietor, it's probably best for somebody who maybe doesn't know how deep they want to go with their business. Maybe you just have a simple side hustle. You don't want to get too far into something. You just want to like test the waters maybe, or maybe you do have a business, you know how far you want to go, but you don't have the funds to set up one of the other business structures in a correct way. So just as a foundation, you want to start a sole proprietorship for now and then change later on. So when we're thinking about the tax implications of a sole proprietorship, it's a pass-through entity. So what that means is that the profits and losses and liabilities all pass through to the owner. So if you have a sole proprietorship, the tax form you're going to list your business income and expenses on is called a Schedule C. And that's a form that you'll file in addition to your 1040. So it's not a separate tax return. It's just an additional form with your individual tax return. And so you get to write off any ordinary and necessary business expenses. So like your tax fees, you get to write off the amount you pay when you establish your sole proprietorship. The only cost that you may have involved with that is if you decide to establish a DBA name or an assumed fictitious name. The price varies. It's probably under $50. Sometimes it's $10. Sometimes it's $20. You file that with your state. Some additional things you'll probably be able to write off, any materials you use, softwares you use, things like that. So a sole proprietorship is really simple. You don't have to share your profits with anyone. One of the major cons to it is the fact that you don't have any liabilities. So that's something that you want to be, concerned with based upon what your business is. Like if you're baking cupcakes, I wouldn't recommend you have a sole proprietorship with that because the risk involved with food preparation and things like that. But let's just say maybe you're cutting grass on the weekend. It's not something that you do too much. It's just here and there. Okay, well, just to have some type of record that you are a business owner, go get a DBA name, which and so that you can get an EIN number. That gives you some type of documentation, on record that you have indeed started some type of business. So that's a pretty high level overview of sole proprietorship.
This is good. I have two follow-up questions that may lead to some more. But first thing is following a DBA name, doing business as name with your state. Is that a mandatory step for a sole proprietor, or is that a extra step that you believe just adds some more legitimacy to the business?
So great question. It's not a mandatory step. Technically speaking, you can use your own name as under a sole proprietorship. So with the DBA name, or it's DBA name, doing business as, or assumed fictitious name, different states use it interchangeably. You file that with the state, and it's pretty much saying like Tanika Mann is doing business as Tahj Tax Services. Mm-hmm. So it's just putting on record that you're doing business under a different name. But another benefit to that is it's leaving like a paper trail that you actually started a business. If you have that, it's implied that you want to start a business. So an example that I can give of the importance of that is COVID. When the PPP loans and the EIDL loans were out, they were going through the state agencies to see if you actually had a business established before this date. Mm-hmm. You filing that form, it's like a paper trail saying like, okay, well, I did have a business in, as opposed to me just saying out of nowhere, well, I've been operating the business just under my name. Of course, you have your tax returns if you're doing that, but, just need something. So that's where a DBA name, would come in handy. So like I said, it's not mandatory, but it is a good idea to have.
That's good. Okay. Another nugget that you dropped is EIN. Can you explain what a EIN number is and why you would want to establish an EIN?
Sure. So an EIN number is like a social security number for your business. As a sole proprietor, you don't have to always give out your EIN number. Sometimes you can just give out your social security number, but that's, personal information. That's not something that you want to go giving to everyone. But then on the flip side, for example, if you want to open up a business bank account, which is very, very important, no matter which type of entity you have, you can't open a business bank account with your social security number. You need an EIN number for that. And to get an EIN number is very simple. You go to the IRS website, or you can Google EIN number. It'll come up. It's completely free. The application takes like 5 minutes. It's very simple questions. You can pay somebody to do it. I wouldn't recommend that because it really does take like 5 minutes. But the process is simple. And like I said, just as a recap, it's just a social security number for your business, a unique identifier. And with the sole proprietorship, you can use that instead of using your social security number. With other entities, it's more important. But as a sole proprietor, it's not required in every situation, but it's a great idea to get.
All right.
Nice.
And I think I have just one follow-up question, I think. And it's just more of a clarification. Can you get an EIN if you don't have a DBA, or do you have to get a DBA to get an EIN? Or if I'm operating business as Sinclair Walker, can I use that to get an EIN?
I'm not 100% sure about that.
Okay.
I want to say you can do it under your name, but I'm not 100% sure.
Okay.
But for sure with the DBA name, I'm not 100% sure with that one.
Okay.
Yeah. All right. So go ahead. Make sure y'all get your DBA first.
Right.
Right. Just to protect yourself. Then go get yourself an EIN number. Our suggestion, we are not tax professionals. This is for educational purposes only. Disclaimer, because I know my grandma go get on me as soon as she watches this. She'll be like, Devon, you didn't give a disclaimer. Disclaimer, do your homework, hire a tax professional. Last question on sole proprietors, possibly. And I don't know if this is true or not, Tanika. So I'm gonna ask you, and you can give me your opinion on it. But I heard if you have a sole proprietor and let's say you lose money, right? So you started your grass company, you started your photography company, you're using all these tax deductions for your cell phone, for your camera, for your mileage, for your meals, and it's been 3 years and you just keep losing money in your sole proprietor. I heard that after 3 years, the IRS is like, you know what? This is no longer a business. This is now a hobby. You keep losing money. You're not making money. We can't give you these tax deductions anymore. How true, untrue, in your opinion, is that?
So that is true. And it's one of those things where it's not a guarantee that it's going to happen, but it can happen. They can come in and say, wait a minute, you haven't made any profits. You just having losses for consecutive years. What's going on here? We're now going to treat your business as a hobby and you can't write off all this stuff. Better yet, we're going to go change your whole tax return. Now you owe us money and we're going to add interest and penalties to that. So that is a very real scenario that can happen.
Just stab us in the heart. Goodness gracious.
Yeah. And, sometimes things fly under the radar and sometimes they don't. So it's one of those things where you never really know. So it's best to just, if it's truly a business, record keeping is very important. But if you're just doing something and you don't really care about it, like it's just a side hustle and you're just doing it just because and for all the, just because, I want a business so I can write stuff off. No, I wouldn't recommend that at all because that is something that can really happen and have dire consequences to the point where it's not even worth it. So, yeah.
There it is. All right. That is sole proprietor, y'all. All right. So if you're interested, and I think she said, if you just want a side hustle, if you have a single owner, if you're testing the waters, if you don't quite have enough funds to get the official LLC and you want a pass-through entity.
Or if you have a low-risk business.
Yes.
Awkward silence here.
I was just adding that in, right? So like if you're doing anything where you're interacting with so one of the things that came to my mind is like, if I just braid hair, you might think like, I can just do this as a sole proprietor, but you dealing with someone's scalp. The last thing you want to do is use the wrong product, and now they got burns on their scalp, and they're gonna come after you, and now you can lose your stuff. So, yeah, I think anything where you're probably dealing directly with humans, or you're doing any type of anything that's altering a person's body, or like you said, like a catering business or anything like that, where you're providing food that's high risk. There could be an ingredient in there, something that's old that you don't know that could get somebody sick. There's a lot of things that could go wrong. So yeah, you have a low risk, like you said, cutting grass, something where it's more low risk, I think is probably also a thing to add.
Beautiful. Okay. Are we ready to elevate to the next level?
Elevate.
Yes.
Always.
All right. Oh, she said always ready to elevate. Good. Great answer. So let's talk about LLCs. And I know LLCs, like there's a lot of different complexities that you can go into with LLC because from my understanding, it's a pretty flexible business structure. But do you mind introducing people to, the first level basic introductory? What is an LLC and who could it be good for?
Sure. Okay. So LLC stands for Limited Liability Company. And what this basically means is, just a recap of what we said earlier. If you have an LLC, it's an entity that you form under your state statute. So you will go to your Secretary of State website, and it gives you liability protection to where if you are a part of any type of litigation and you were to lose, the whoever is suing you can only come for the assets that your business has. They cannot touch any of your personal assets unless the state decides to take your liability protection away. And I can talk on a little bit of that later. But just as a foundation, LLC, you have liability protection to where if you are ever to be sued or anything like that, only your business assets can be impacted. Now, when we get into a little bit of the tax implications of an LLC, how your tax is going to be dependent upon how the LLC is set up. So if the LLC has only one owner, it's going to be taxed the same way as a sole proprietorship, where you're going to file your individual return, your 1040, and all of your business income and expenses are going to be included on a Schedule C. Now, LLC is recognized by the IRS as a disregarded entity, which means it's not separate from its owner. And that's why you just file out your individual form and add the Schedule C to it. Now, if there are two or more owners, the LLC is going to be taxed as a partnership. Now, what this means is the LLC is going to file a Form 1065. This tax form is due on a different date. It's due earlier than the regular 4/15 deadline. Is due on March 15th. So that's something to be aware of. And it can have higher costs. An individual return is way cheaper than a partnership return. So that's something to keep in mind. And then also, if your LLC is having to file as a partnership, you need to be aware that the business itself is going to be reported on the 1065, and then the owners are then going to be responsible for completing their individual tax returns. And then also an LLC can be taxed as an S Corp. An S Corp is not necessarily a separate entity, as a lot of people refer to it as. It's actually a tax election. And that is due on March 15th as well. The tax return for that is an 1120S. And it's a pass-through entity. It's similar to a partnership, how a partnership is filed, but there are certain differences in terms of how the owners and stuff deal with their taxation. So within the LLC, it can be kind of technical, but in terms of like what the business can write off and stuff, that's typically the same across the board. You still want to make sure you keep up with your record keeping. You still can write off like ordinary and necessary expenses. You just want to keep that in mind. If it's ordinary and necessary for my business, 9 times out of 10, your tax preparer can substantiate it so that you can write it off on your return.
So. Look, master class in LLCs right here. I got some questions for you, Mr. Tanika. I'm coming for
ready.
you. All right. So first question is, as a married couple, right? So if we're a married couple, can we still have it as a sole proprietor, or does it have to be a partnership because there's two people?
So since there's two people, you can't have a sole proprietorship, because a sole proprietorship is only one person, unless there was one of you who had the business and everything, you just had everything under your name. The other person legally is not going to be responsible for anything. And then in terms of it being two people, you can form an LLC and then it be taxed as a partnership, or you can just form a partnership. So that you guys would have to decide that, but that's pretty much how that would work. Did that answer your question?
Yes, ma'am. Yes, ma'am. The next question was on, what was the next question, Sinclair?
That was the question I was going to ask.
I had another one about LLCs. Oh, that's what it was. So for a sole proprietor, you had those 3 years to be, losing money before they say it's a hobby. Is it the same 3 years for LLC?
Yes, that's across the board. The IRS can come in and look at you and say, wait a minute, why are you continuously in the loss? Like something's not adding up here. And then they can say, okay, well, we're going to recognize this as a hobby and just change everything up on you. So, yeah.
Nice. Is there a profit threshold that you would consider? Let's say someone has a low risk business that they start as a sole proprietor. They've been working for 2, 3, 4, 10 years. Is there a income threshold where it's like, all right, listen, you cutting grass, and now you're making $200,000 a year cutting grass. I think it's time you might want to, change your business structure. Is there a certain income limit when you would suggest that?
So I would say once you start making maybe, let's just say more than 40,000, roughly off the top of my head, that's when maybe you should start considering to change the entity. But here's the thing with that. So a sole proprietor, an LLC, and a partnership are going to be taxed in similar ways. They all pass through to the owner. You have to pay self-employment taxes with those entities, which is 15.3% on your net profit, in addition to your income tax. So once you start making higher net profits, that's when a calculation or some tax planning needs to be done to see if it still makes sense for you to sit in a sole proprietorship or an LLC, or do you need to change your business structure to an S corp, which will save money on self-employment taxes. So I would say about 40,000, but I would start the calculation. If you're making maybe 20, 30,000, just bring up the conversation then, especially if you anticipate your revenue is increasing.
Gotcha. Okay. Now, the only thing that I'm still uneasy about is I feel like someone else told me that for married couples who are filing jointly with their LLC, they could still do it as a sole proprietor instead of a partnership or a S corp. And maybe I got talk to. I'm not gonna say your name on camera, brother, but you know who I'm talking to, right there. You look in my eyes right now. I see you. All right. But but any extra thought on a married couple filing jointly, so they still have to do as a partnership?
So no. So I was speaking more towards like the ownership portion of it. So if you're filing joint, regardless of who owns or if you have a partnership or not, the income is going to flow through to both of you. It's just the ownership portion of it. With a sole proprietor, you can only have one owner.
Got it.
But at the end of the day, the Schedule C is going to impact both of you because you're filing your incomes together. Okay. So like, Devon, if you had, you wanted to sell, if you wanted to sell
board games.
You sell board games. I was trying to pick something else. So, Sinclair, if you created like hair grease or something like that, right? You decided to set up a sole proprietorship. It's under your name. The Schedule C is going to be under your name, or if you decided to do an LLC that just you solely own, is going to be under your LLC. You're the sole owner though, but it's going to impact Devon as well because you guys are filing joint. So does that kind of it's more so of a ownership thing as opposed to an income thing, because income is going to flow together regardless. Does that kind of make more sense?
It does. So here's my thing. What we promote, or at least what I promote on this podcast, is I think every family should own a business. right? So let's say, we're a family, we're starting a new hair grease business. Let's get into this hair grease, Sinclair.
Okay.
All right. And we want to be equal owners, right? We're a married couple, right? But we want, 50% ownership for Sinclair, 50% ownership for Devon. And then we get to our taxes. Is it now we're filing separately? I feel like that's the part that kind of gets a little confusing for me. I just want to make sure that's clear for married couples who are wanting to start a business together, how to move forward with that.
Okay, so if you want both parties or both individuals to have ownership, that needs to be done at the when you're structuring the business. So if you're forming an LLC, both you have your LLC agreement. If your state requires it, that you list all the owners, you will list both individuals as owners. That's going to signify that both people own whatever percentage of the business. In terms of the income, right? So, and you're filing joint, like I said, it doesn't matter from a tax perspective because both you are going to be taxed on your income in totality. Yeah. So if you have a partnership, for example, the partnership is going to issue 2 K1s, one to Devon, one to Sinclair. The profits or losses is going to be split 50%. But when you do your taxes, is going to be, you're going to see 100% because you guys are filing joint.
Got
it. And with like a partnership or an LLC or a sole proprietorship, those are pass-through entities. So the income and liabilities of the business are being passed through to the owners, which then impacts your individual return.
Gotcha.
Did that provide you some more clarity for you?
It did. Thank you. I appreciate that. I know we putting you on the spot here. We appreciate you, Ms. Tanika.
Okay. So in a nutshell, like for a married couple who is filing jointly, it doesn't sound like it makes a lot of sense to do an LLC partnership because it sounds like it's going to be more, it's going to cost you more, right, to upkeep that, but the income is all going to flow in the same. Does that sound?
No, it does, because even though the income is going to flow through to both of you at the end of the day, you still need documentation and the paperwork to say, hey, I own 50% of this business. Hey, I own 50% of this business. If you don't do that, then it's going to be like one person owns 100% of the business. So while in terms of your taxes, because you're filing joint, it's all going to flow through together, there's other business considerations that are important outside of taxes. You still want some type of protection to say, wait a minute, I own this, or I have this say so in the company. And that's important, even, as time moves on. So, yeah.
Yeah, very important, because in the last episode, we did talk about divorce, which unfortunately does happen. So if whatever reason, it's like Sinclair owns 100% of this hair grease company and then we get divorced. Hold on now. You can't leave me with this business.
Yeah, I guess I'm confused. What are we? What is our business structure?
Our business structure is LLC, but taxed as a sole proprietor.
Okay. And we have our percentages set up.
And we have our percentage set up with you owning 51%. Okay. Because you are in charge.
You can still set up those percentages as a LLC, not as a partnership.
Our business.
Well, you need both.
Thank you, Ms. Tanika.
Both. Because LLC with multiple members is taxed as a partnership, but if you have multiple members, it's important to say your ownership percentages, because that also determines like who has more power. So if you have 51% if you own 51% of the company, you make the final decision. So say if Devon decided to sell, right, and he decided to sell to 2 or 3 other people, when you didn't like their decision, you can come in and say, wait a minute, I own more than this. I don't care what y'all say. This is what we doing. Because you
do that, Sinclair? You like that?
Nah, that ain't how it's going down.
And then on the flip side, not to be negative, but then on the flip side, if you don't say, if you don't set up like any type of ownership percentages, the one example that comes to my mind is in Waiting to Excel, when Bernadette, her husband, and she said that she helped him with the business, but he decided to divorce her and she didn't have no claim in it. So, that's she can't do anything because she doesn't own it.
Right.
So that's also important.
Look, this is great stuff, y'all. I hope y'all taking notes. Hope y'all appreciating the information. I think a major nugget that I'm taking away is even if you're starting the business as a married couple, you should still treat it as a business, right? This person has this ownership, this person has this ownership. You have this role, I have that role. Still treat it as a legitimate business, y'all.
Absolutely.
Are we ready to go off to corporation?
Yes.
Yeah. Okay.
We are.
The
Wait,
corporate
no,
structure.
we are not.
Okay.
Wait a minute.
Another gym.
Oh.
Okay. Another thing that I need to also mention with LLCs that you need to be careful about. If you are a single member LLC, you need to make sure that you're making estimated payments. That's important. If you don't want to have additional penalties and interest and you don't want to pay like a large tax bill, you need to make sure that you do that. There is a higher fees when you're starting an LLC. It varies by state. Like in Virginia, it's about $75 or $125. Nevada, it's about $425.
That's a big difference.
Then there's an annual registration that you have to pay. These are all tax deductible costs, but it's stuff to be, just to have in your mind with an LLC. That's something that's really important as well. Yeah. So now I'm done with LLCs. That's pretty high level. Yeah.
Well, now you're bringing up more questions. So if you live in California, if you live in Virginia, if you live in New York, you don't have to file the business in that state. Like, can you talk about like the decision on where to file or where to register your business as a LLC?
Sure. That takes a bit of research. It depends on your entity. It depends where you plan on operating at. You have to research the different states' foreign entity laws. You want to consider what the tax rate is in that state, how to form an LLC, the information that they require. Those are some of the different things that you want to consider. So you don't have to just only have your business in your home state. You can take it elsewhere, but you want to consider the implications of doing that. They can be very costly, but then sometimes the costs can be beneficial in the long run.
Yeah. And I'll provide an anecdotal situation for that. When we were getting started in our investment real estate journey, we were trying to figure out whether we take our existing LLC and just register it in Illinois or start a new LLC. And after talking with an attorney, they basically were like, yeah, it's actually going to be a lot cheaper and a lot more a lot better and quicker also for you to just start a new LLC. So that was something that we definitely took heed to and just started a new LLC. And I know that, correct me if I'm wrong, but in terms of like real estate, and if you wanted to invest in real estate property in other states, you do need to register your business there or start an LLC in that state. Is that correct?
Yes. And then also consider which states have, I believe the term is reciprocity with the other states. Some states will allow you to be in one state, like I believe Maryland and Pennsylvania, they have a reciprocity agreement, I believe, where you can live in one state, but they're not going to treat you as a foreign individual for being in another state. That's one consideration. But yeah, that is true. With real estate, especially, you may want to open up a LLC in the state where your property is. And then just to add on to that point, with real estate specifically in LLCs, be mindful of how many properties you have under one LLC. I was taught no more than 3 because it goes back to the liability that we talked to earlier. If somebody was to, get hurt or something like that, you don't want them coming for all of your properties, right, or, just one. So that's just just another tip that could be beneficial to someone.
Nice.
Very interesting that state to state they consider you a foreign entity, although you're in the same nation. It's like, hold up now. It's foreign territory. Back on up.
California, where is that now?
He said California.
California.
That's funny. Okay, so I want to talk about corporations selfishly because one day I want to own a corporation just because it feels like a big flex.
Just to say that.
Just
you
to
own
say,
a
like, yeah,
corporation.
you know what I'm saying? My corporate entity, you know, M4 Inc. You know, just I'm a corporate business owner. We have shares. We're the only owners of the shares, but we have shares.
You know
It
what?
just seems
there
like
are
a big
there are
flex.
worse, bigger flexes. So if that's the one that you want to accomplish, I'm not mad at it.
Yeah.
King.
Okay. So can we get into what is a corporation? Why or who would want to start a corporation? And of course, we'll get into some lovely tax stuff. And then we're going to hit you with random questions, Tanika, because that's just what we do.
Of course.
Cool.
Okay. So a corporation or a C Corp is a standalone entity. And this means that the corporation stands by itself. It has its own tax rate. It's completely separate from the owners or whoever formed the corporation. Some things to consider with the corporation is the cost associated with it. You have your filing fees. In some cases, you may have to consult with an attorney. It is more advantageous for someone who wants to have a lot of investors or more than 100 shareholders. You have to do things like record keeping. Certain states are strict on what they require of corporations. Corporate law can be very complex, even when it comes to corporate taxes. However, depending on your situation, the corporate tax rate is 21%, which is really good. The flaw in one of the biggest flaws with taxes when it comes to corporation is the fact that you're dealing with double taxation. And to explain that, the profits of the corporation are taxed at the corporate level, and then when the corporation distributes the profits to the shareholders are then taxed on their individual returns. So corporations are known for having double taxation. However, depending on how your business is structured and what your purposes and things like that is, you know, a corporate structure may be more advantageous for you.
To clarify what you just said, if we somehow decided to turn our business into a corporation today, and between the two of us, we own 100% of our shares. Now our business is it's almost like its own person that's going to get taxed. But then also when we pay ourselves from the business, we're going to get taxed again. Is that what you mean by double taxation?
Yes,
okay.
Exactly.
Cool. Just wanted to break it down.
Is the distributions that the corporation pays out in salary, are those tax deductible?
So the distributions are not. The corporation has already paid taxes on the income that they had, and now they have to distribute it. So in that case, no. The salaries that the corporation pays, that's a tax deduction.
Okay. No, okay. We playing.
The
Yeah, we
salaries,
playing.
and then the federal or the taxes that the corporation is responsible for, that's also a deduction.
Yes. Okay. And then are there any benefits when it comes to buying I guess like assets through the business structure, right? Whether that asset is a car, whether it's a real estate investment, whether it's a building that you do business in, is there any benefit to being a corporation buying those assets versus a LLC buying those same assets?
So in terms of taxes, you'll still, in the event that these are business assets that you're purchasing, you're still going to be able to deduct it. I think the benefit, in my opinion, comes in other areas. So let's talk about a car, right? If you're a single member LLC and you purchase a car for your business, you can write off the deductions associated with your car. If you're a corporation and the corporation purchases a car, it's easier for the corporation to record the deductions and take them, as opposed to if an individual person, one of the officers or someone purchased a car and was using it for business purposes,
Mm.
because the accounting would work differently. So you'll still get the deduction if it's for a business purpose, but the accounting for it can be tricky. So just to simplify it, purchase the assets under your business if they're business use assets. Definitely. That will make a big difference, and it will simplify your accounting.
Gotcha.
That's the better way to go about it, rather than I'm purchasing it as Sinclair, but I'm using it for business.
Yeah.
Okay.
You don't want to do that if you can purchase it under your business, because there's loopholes to where a tax preparer can, get you a deduction for that, but it's, a little bit more difficult. And then
Gotcha.
also, when it makes sense and you purchase a vehicle under the business, it just makes, even like preparing records for the IRS, you simply know that this car is for my business, so the mileage and everything is under my business name. It's simpler for you to determine which method to use to take the higher deductions, whether you're doing mileage or actual expenses. So it's much simpler. And then in terms of like a building, for example, like you said, it makes it simpler as well if it's under the business name, because that documentation is there. You're using your business account. You can put it on your taxes. If you individual was to purchase the asset and the business was using it, a transaction may have to be done to put it in the business name just to comply with corporate law. Under an LLC, it's a little bit more flexible. You can say, okay, well, I'm renting out my home office, even though the home office is in your home is in your name, but you can still get something for that. So it really depends. But if you can put something in your business name, it will definitely be easier for you.
Gotcha.
Nice. So earlier we talked about EINs when it came to sole proprietors. Can we circle back to EIN when it comes to I don't know if you need one for a corporation or for an LLC, but is the EIN still applicable for those two other business structures?
Yes, you do. So an EIN, like we said earlier, is like a social security number for your business. So whether you have an LLC, a partnership, or a corporation, you need to file a EIN number. Whenever you change the name, if you change the name of your business, in some cases within the LLC, you don't need a new EIN number, but there can be other situations where you do have to get another one. That's something that you would speak to your tax preparer with. An EIN number is required in cases like when you need to get a business bank account, or if you're applying for a loan, or if you're applying for a grant. Some organizations may ask you for your EIN number. They're not going to accept a social security number. Even if you have a sole proprietorship, I recommend that you still get an EIN number, because it's essential. It's something, and also when you're applying for certain things with your business, it distinguishes you and it shows that, you're more intentional and you really, it's just more professional, I guess I can say.
Yeah, really good, really good. So if you're listening to this, watching this, and you're getting any value from it, make sure you give us a like on YouTube. Make sure you follow Tanika as well. She is on the gram. We'll put Tanika's Instagram right below as well. Make sure y'all follow her so you can get some more information on taxes and business structure. And definitely send this episode to another friend that wants to start a business, but is kind of not sure where to start. So I know you said corporations are mostly for people who are maybe seeking investors. That seemed like that was the big, huge difference. But I wanted just to ask blanket statement, right? For married couples who are interested in starting a business that gets passed down from generation to generation, it can survive the test of time. Which business structure would you recommend?
It depends. It depends on what they're doing. Over time, with certain structures like an LLC, you can always add a member. With a partnership, you can add members. You can restart. You can transfer assets. Of course, there's costs associated with this and paperwork, but in terms of the test of time, it's not so much of the business structure. It's just having that mindset, okay, like I want to keep this in my family. I want to make sure that I'm doing business with the right people. I want to make sure that I'm making the best tax decisions to, retain profits, not pay it out to the government. And then in terms of structure, you want to make sure you're doing tax planning. So as time is going on, and you're increasing your revenues for your family, you can make sure that you're sitting in the best structure so that the business can remain as profitable as possible. So in terms of structure, it's just staying on top of your tax planning, staying on top of your goals, your revenue goals, things like that, making sure everybody associated with the business has the right mindset of wealth building, and keeping it in the family, and only selling if it's makes 100% sense. Because it's not always good to sell, and sometimes it is good to sell. Like if somebody about to give you maybe like $500 billion for your business,
Whew.
that may be beneficial to you. But then sometimes if someone's offering you maybe like 400 or 500, maybe even $1 million, you have to really think like, wait a minute. If like what Master P said on, I believe it was Solange's album, if he offered me $1 million, how much am I really worth? Because nobody's really going to take something if they don't see it growing, this, that, so just that mindset, and just staying on top of business topics and taxes and just all that all together.
Oh yeah, I just wanted to put that out there in case anyone is listening that
that wants to give us
$500 billion, I believe is a quite adequate offer for any of our business assets, and we will accept. So 500 billion is the new number. Thank you, Tanika.
Thank you for that evaluation. Quick question, and either of you can answer this. Chick-fil-A, are they a corporation or are they an LLC?
Chick-fil-A should be a corporation.
Yeah, I'm pretty sure they're a corporation. But I actually don't know.
Because I was thinking, I was thinking as you were asking that question on like what would be the most beneficial business structure for a family. And at first I was thinking like, well, corporations, once you start getting shares involved, I mean, maybe I watched too many movies where there's like takeovers of the companies and stuff like that. But I imagine that there might be a little bit of risk once you do have shares involved, investors involved, to where I imagine that there is a risk that you could eventually lose control of your company because it's its own entity. You have to just make sure your I's are dotted, your T's are crossed. Whereas I imagine an LLC would be a little bit easier to manage as you pass it down because you're just adding members, like you said. But please let me know if I'm completely wrong.
I understand what you're coming from, where you're coming from, but I think of like Walmart, and how Walmart's a corporate entity on the public market, and I think it's more so that their family has a majority stake in the company. Mm-hmm. So it's kind of like, what we talked about earlier, having your paperwork together. So where, all right, our family owns 51% of this company. The other 50 is owned by shareholders who individually own 1%, 2%, 0.05% here. You can't make any decisions with that. So I think we also have to consider that scenario too. But then also, like what you said, just thinking about the ownership, and if we bring in, certain shareholders or certain board members, how is that going to affect our company in the long term? That's an important, those are important questions to answer to when determining your business structure and, the things that come along with it.
Yeah, gotcha. And you can be a private corporation where you don't have public stocks, and you can still sell stocks to other private people. And you can also have different levels of stocks, to where it's like you have ownership, but you don't have voting rights.
Right.
It gets deep. And Chick-fil-A is a corporation. Check that out. All right. So Tanika, we've had you in the hot seat. I don't know if we've asked
burning. Is your booty warm?
Look, I don't know if we asked anyone else as many questions as we've asked you. So we're gonna give you a break. We're gonna head into our Ask Declare segment, where you can ask us a question on our business journey, Sinclair as a health professional, or just us as a lovely couple. Feel free, take your time. We here for it.
Okay. I do have a question. So as business owners, What do you guys find frustrating in terms of like taxes and tax planning and just anything tax related?
Paperwork, receipts.
All of the above. I think in a grander state, we're in that like weird middle place where it's like we have enough going on to where we really should have an accountant, right? As the detail oriented person, I'm typically the person doing that type of stuff in the background, but that's not my expertise. It's just, of the two of us, I'm the better person, but I'm still not the best. So like we're at that middle, that stage where it's like we really need to start outsourcing and get a professional for that, but it's also like, okay, does that financially make sense for us right now? So yeah, that is, from my side, I will say, a frustrating place to be in, to where it's like, we really need help with this, but I don't know if it makes sense financially to get help with this. So we just kind of struggle our way through until it really makes sense, basically until we have to, or, you know, come across something where it's like, I don't know how to do this, and now we need to, you know, reach out. But yeah, I think that's we're at the stage where now we're like consulting different folks, but I would love to be at a point where, yeah, we have like a designated like accountant, somebody to really just make sure we got everything going on, so that we can focus on the like more creative side of the businesses and helping them grow and stuff like that. Yeah, so that's my answer.
Yeah. And then I think for me, it gets a little overwhelming because there's so much tax information out there. There's so many people on Instagram giving tax advice, on YouTube giving tax advice, tax strategies, tax plays, and do this with a holding company if you want to do this. And this is how you buy a car with your LLC. And it's like, I feel like as a business owner, you feel like you should be doing all these tax things, but because we're not professionals, we don't know which tax things we can legitimately do, which ones we can't do. And yeah, just it kind of gets overwhelming because you want to do as much as possible, because you want to get all the tax advantages that come with entrepreneurship, that come with business ownership. Yeah, and you don't want to miss out on them. So I feel like that's probably my most frustrated thing on my side, is wanting to get the most out of our business, but not having the knowledge on how to get the most out of our business ownership.
Yeah, I think there's so much information, and it is a bit, I can see how it can be overwhelming, because even me as a tax professional, I get overwhelmed because I'm like, what are you talking about? So my strategy, like, what? So my strategy is to just go to the comments first, and I read it, and I let people do some of the work for me. If they say, if too many people say, wait a minute, this is not right, and they are rebutting whatever the person says in the video, I'm not listening to you. But also, like, I can understand where you're coming from, you know, where you both are coming from, with it being time for you to pass that on to somebody else for growth, because, you know, a part of building a long lasting brand is having a team, and you know, relieving some of those duties, but also making sure you're comfortable and you have somebody on your team that you can trust. But also sometimes you got to fact check people, like myself, myself included. My clients fact check me. I don't have a problem. Like, I over explain a lot, you know.
That's good.
Yeah.
Nice.
But I do have another question, Sinclair.
Oh,
Since you're like a health nerd, like, do you have any since tax season is coming up, and for people who are stressed and who are like overwhelmed, and they just have like a lot of stress, and maybe even like analysis paralysis, where they just don't know what to do, like, do you have any tips for them on like keeping that down or how to manage it?
Yeah. So the first thing that I had come to mind was breathing. That sounds so simple. It's like, I'm already doing that, Sinclair. That's why we're here. But deep breathing is a wonderful form of meditation that you can be used literally anytime, anywhere. So it is something that I have adopted myself in those times when I feel my body tense up. Like, I tense up a lot of my neck and shoulders. So there's some times when I'm like at my computer and I'm literally like this, and I don't realize it until I'm like, Sinclair, like look how you're sitting. And I'm like, okay. Like, that's when and that is when I will take about 5 minutes to just close my eyes, and I'll do what's called box breaths, where you inhale for, let's say you start off with 4 seconds. If it's your first time, inhale for 4 seconds, hold it for 4 seconds, exhale for 4 seconds, and then you hold again for 4 seconds. So that's where the term box breaths come. But what that does is stimulates what's called the parasympathetic nervous system. And that just basically means your calm mode. Like we all have a Zen mode, and all you need to do is learn how to tap into it. And so in that mode is where your heart rate goes down, your blood pressure comes down, your cortisol levels decrease. All of that kind of just puts you into like a rest and digest mode. So I definitely recommend in the moment, if you find yourself like, okay, I'm thinking about my taxes, I'm getting stressed out, do those couple seconds of breathing, of box breaths, but also implementing it as a daily routine. And I'm partially talking to myself here because I need to get back to implementing this into my morning routine. But I feel my best when I take about 10 minutes, sometimes 20 if I'm feeling real naughty.
Ooh.
I take about 10 minutes every morning when the cortisol levels are highest, and I just breathe. And I literally focus on nothing else but my breath. And sometimes those thoughts will come up like, oh, tax season, right? They'll come up. And all you do over time is just get better at how quickly you're able to come back to your breathing and your center. So that is my biggest recommendation for anybody to implement on a regular basis, because once you do implement on a regular basis, you'll become a little bit more in tune with your body and realize when your body is starting to tense up and when that stress is starting to affect you physically. So I can give a whole bunch of recommendations and we can be here for another hour, but to give you one.
Jair, no, we can't let that happen.
To give you one, that would be it. Nice, deep, with your belly. You should feel your belly like protrude out when you're doing those deep breaths. 5 minutes a day will do wonders.
Thank you. I'm going to pass that on to my clients.
Absolutely.
That's a good one. All right. So hopefully we gave you a nice little break.
Mm-hmm.
Your cortisol levels can come back down. Right. So I want to ask you maybe one last question, possibly the most important question that we ask on this show. Do you believe as a tax professional that every Black married couple should have a business? Just, from your own personal, I'm not going to tell you. Oh, I already told you mine. Never mind. Dang.
It's very obvious the way you ask the question.
Yes.
Oh goodness. Okay. Give us your thoughts from on the tax side, if every married couple should have a business.
I'm going to say no, only because I'm sorry. It's just, this is not cut out for everybody. Just realistically speaking. Now, if one person in the marriage wants to start a business, I believe the other partner should be supportive of that. But I don't think everybody should do it, just because some people are not cut out for it. Having a business is a lot, even dealing with like tax law and the record keeping and all the stuff that can happen, and just being responsible with money and making financial goals and, tax planning every year, paying estimated payments every quarter. That can be a lot for some people, and they're just not for it. But if you decide that having a business is not for you, I definitely think that every married couple should support a Black business for sure. Invest in one, at the very least. So for the reason that just everybody's not cut out for it, I'm going to say no, but definitely encourage those who are, support those who can do it, support them with that, because all of us entrepreneurs, like, we definitely need the support. So.
Shay. Yeah, if you're not gonna start a Black business, support a Black business, invest in a Black business. I'll accept that answer, Tanika. that was a good way to bring it back. So if you don't mind, let folks know where they can find you on Instagram. Let folks know how they can find you on the interwebs, and if they need a tax professional, y'all can definitely tap into Miss Tanika at Tahj Tax Services. But if you can give the people your socials.
Yes. So I'm on Instagram at Tanika Mann _EA. My website is www.tahjtaxservices.com. My email is taxes@tahjtaxservices.com. You can reach out to me through any form that I just listed. I'm pretty responsive. As we are in the end of the year, it is prime tax planning season. So if you haven't done any tax planning, make sure you do that. And even this episode is really important, because one of the Components of tax planning is making sure you're sitting under the correct structure. So feel free to reach out to me anytime. I am accepting new clients and I offer free 15-minute consultations. So thank you. And thank you guys for having me.
Of course. Again, the website is right there on your screen, www.Tahj Services. Tahj is spelled Tahj, taxservices.com. Make sure y'all tap in. She said a free FREE, free.
Better go get that
15-minute. Yeah, get your consult, right? That way you at least know if you're heading in the right direction and if this is the right person to work with. So make sure y'all tap in. We're gonna do some quick updates, and then we're gonna come to you to close us out. And if you can give us like one really good practical tax gem. Did I say practical? That's what I meant to say. What was the word, Sinclair? Listen, don't stop bullying me. Stop bullying me. So if you can give them one practical tax strategy or advice to use this tax season as a couple with a business, that would be a blessing. Sinclair.
Yes.
Updates for the week. What you got for the people?
All right. Well, we are. Is that next week that we start our challenge, or the week after?
We start our challenge November 16th. So that would be the following week.
Okay. So we're just about less than 2 weeks away from our $1 Million Marriage Challenge. So we've talked a lot about, how to create wealth here with not just how to create wealth with the taxes and everything, but what we talk about on the show is how to use your family, use your marriage, use your gifts to create a business, to really build that wealth that you can pass down to future generations. So if you have started that process, but maybe need a little help refining your plan, or if you haven't started that process and you need somewhere to start, this is the perfect 4-day challenge for you. You can go to www.milliondollarmarriagechallenge.com and sign up. One of the best things about it is it is a pay what you want admission.
What?
So you can pay $1, you can pay $100, whatever you find this.
Please pay $100. Do not pay $1.
Whatever you find this valuable as is what you can pay. But we're going to make sure that you get the best value regardless. But yeah, we are about to start that. We've got some experts that we've had on the show that are going to be guest presenters. We've got Snooks and Lovey from Married into Crazy. We've got Marjorie McPike from McPike Tax Services. So we've got some heavy hitters. We got Coach T.
Coach T coming through to change your life and make sure your family has a mantra, something that you can say, something that you can believe in times of need, to really get you motivated. He's going to help you go through your life operating principles as an individuals and as family. So as you're going through, we talked about every time we leave or every time we come back to the house, we hug each other, we embrace each other, we kiss each other. That's a part of our LOPs, which T will tell you all about in 2 weeks. Hit up milliondollarmarriagechallenge.com. Invest in your marriage today. Quit playing, y'all. Let's go. We'll see you there. And then, of course, you can always tap in to playblackwallstreet.com, another way to empower your family and continue to learn about the legacy of Tulsa's Black Wall Street. We have a dope campaign coming, y'all, very, very soon. We can't tell you about it. Stop asking. I can't tell you about it, all right? Jair, we can't tell nobody, all right? So make sure y'all go to playblackwallstreet.com. Get yourself Black Wall Street, the board game, today for your family. The holidays is right around the corner. It's a perfect gift for any generation, any family who loves Tulsa Black Wall Street, the legacy of it, and, of course, building generational wealth. Playblackwallstreet.com. Don't play with yourself. Now, we ready to drop that gem? I got my notepad out, Miss Tanika. If you can end us strong with the tax gem for our families out there to hopefully use or at least ask their tax professional this season.
So this season, I would say make sure you do your tax planning. It is really essential because you want to go to your tax preparer. First, you want to have them assess if you miss any deductions. You want to make sure you're sitting under the appropriate structure. It may be time for you to transition into an S corp. You may be paying too much money in self-employment taxes. Make sure that you are making plans to increase your revenues. You need some type of goal. You want to make sure that you have your travel and everything, scheduled out so that you can take advantage of those tax savings. You want to make sure you're taking advantage of the correct vehicle deductions, whether that's mileage or actual expenses if you plan on purchasing a car. You want to make sure you're taking advantage of everything. You want to talk to them about some of the tax laws that are changing from 2021 to 2022. So make sure before the year ends that you do tax planning, so that going into 2022 or 2023, you are making way better decisions and you are paying the least amount of taxes as possible. But the only way for you to get there is if you do tax planning.
There it is. Don't wait. Don't hesitate. Do not procrastinate. Make sure you plan your estate. I just wanted to rhyme a little bit. You know what I'm talking about. But make sure y'all are doing your tax planning early, not in March, not April 13th, definitely not April 15th. Make sure you are planning ahead of time and reach out to a tax professional. Miss Tanika, we appreciate you. Thanks for coming through. It was a pleasure. Next time we're in the East Coast, we're gonna try to, meet you in person again, make something happen. But Queen, you all good for today?
I'm great.
Great. Yes, you are. We appreciate y'all for tapping into another episode of the Melanated Married Millionaires in the making, episode 137, y'all. We see the analytics, we see the growers, listeners growing. That's the right
see the
word.
growers
We see the growers listening. They might be too, but we see the listeners growing. For some reason, we have a good listenership in Asia. We got a few folks in Ghana listening, people all over the United States listening, a few people in Europe listening.
IE was tapping in. The IE was tapping in.
Yeah, IE, Southern California, LA, NorCal, Texas, Virginia, Fontana, California. So we're looking. We appreciate y'all. Make sure you keep listening, liking, and subscribing on YouTube and anywhere you're listening to this podcast. And of course, keep sharing it with other melanated married couples that you think would get value from it. I'm your host, Devon Truvel, creator of Black Wall Street, the board game.
I'm Sinclair, aka the health nerd.
Make sure y'all secure the marriage. Make sure y'all secure the love. And of course, make sure y'all secure the bag. Peace. Thank you for supporting the M4 show and our mission to increase the wealth of Black families.
If you received any value from this episode, any value at all, any, do us a favor and give us a like and subscribe on YouTube and Apple, Spotify, anything, all of them, all of them, wherever you're listening, go ahead and like and subscribe.
And after you like and subscribe, make sure you send this episode to at least one family that you really want to see win. We'll catch y'all next time. Peace.